Nvidia's performance in 2023 has been nothing short of impressive so far, having seen its share price soar by more than 200% year to date. The question on every investor's mind will be whether Nvidia can carry on this momentum going into 2024, and how high could its share price go. In an attempt to answer that question, I looked into Nvidia's third quarter FY24 results, assessed its potential tailwinds and headwinds, and finally projected a valuation going into 2024. Let's get right into it. It's no secret that Nvidia's impressive share price performance is mainly down to the artificial intelligence boom in the past year. The public launch of ChatGPT back in November 2022 heralded the start of this AI boom, and it showed the world the many possibilities and benefits of using AI. Since then, we have seen many applications of AI, whether in the fields of creating digital art, editing videos, or even analyzing and summarizing information from different media sources. The use cases of AI are particularly limitless and far-reaching. Behind this AI boom is where exactly Nvidia comes in. Now, I am first to admit that I am no technical or AI expert, so some of my understanding or use of terminology might not be exactly correct. For my layman's understanding, for AI applications to function as intended, a huge amount of data has to be processed via different layers of machine learning and processing. And when it comes to processing this vast amount of data, Nvidia's GPUs has been shown to be one of the best in the market right now. This incredible edge is mainly down to a decade's worth of research and development that Nvidia has done into optimizing its GPUs for high-performance computing and AI. Besides offering just the GPU products on a modular basis, Nvidia also offers full-stack solutions. This means that clients don't need to purchase and configure individual separate products for their AI solutions. Both these one-stop solutions and the more scalable modular products are the main drivers contributing to Nvidia's incredible financial performance we have seen in FY24 thus far. We can see that the data center segment has grown exponentially. 9-month FY24 data center revenue currently sits at $29.1 billion, representing a 155.7% year-on-year increase. In comparison, Nvidia's other revenue segments experienced rather mixed growth. The gaming and automotive segments both recorded positive 4.8% and 33% year-on-year increases respectively, while professional visualization and OEM/others experienced negative year-on-year growth respectively. In terms of overall revenue for 9 months FY24, it stood at a total of $38.8 billion, which represented an 85.5% year-on-year increase. Net income and diluted earnings per share came in at $17.5 billion and $7.01 respectively, representing year-on-year increases of 491.6% and 499.1% respectively. Yes, you heard and saw that right. A close to 500% increase in Nvidia's bottom line. You don't normally see such numbers for a large cap company, which once again highlights how much Nvidia has benefited from this AI boom. So with such impressive numbers, what's stopping Nvidia from reaching new heights in 2024? Well, quite a few actually, although I won't necessarily deem them as stonewall obstacles, but rather more as uncertainties. The most obvious one would be the recent export restrictions on AI-centric chips to various different groups of countries, not limited to China, Russia, and Vietnam. According to Nvidia, affected countries under the new export restrictions contributed approximately 20 to 25% of Nvidia's data center revenue over the past few quarters. Based on its third quarter results for FY24, this will amount to around $5.8 to $7.28 billion. Not a small sum by any means. However, Nvidia expects this drop in revenue to be offset by growth in other countries. Additionally, there are also rumors that Nvidia has already developed new GPU products that comply with the latest round of export restrictions. However, it will only be shipped out in the first quarter of 2024. Despite a potential substantial hit to Nvidia's revenue due to the new rounds of export restrictions, the company still forecasted revenue of $20 billion in the next quarter, which was a 10.5% increase from third quarter of FY24. Personally, I think investors can only adopt a wait-and-see approach when it comes to the potential impact of the new export restrictions. The actual fact is that no one really knows if demand and sales for other countries are able to surpass that of the affected countries. Nonetheless, a clearer picture will definitely emerge in Nvidia's fourth quarter FY24 financial results. Besides export restrictions limiting Nvidia's growth, investors also need to consider the amount of runway left for Nvidia in this AI boom cycle. While demand remains sky high for now, there will be a stage where it will definitely plateau out, which will consequently result in a slowdown of Nvidia's growth. This is in line with every S-curve growth of new technology. If you ask me, I think we are somewhere between the growth and scaling phase of AI adoption. In terms of how many years it will take before hitting the mature stage, it's really anyone's guess, but it will mainly revolve around three main factors. Number 1, the demand for high-performance computing power. Number 2, the return on investment of current AI investments. And finally, number 3, the amount of available products in the market now and in the future. In terms of high-performance computing power, I think it's safe to say that it's nowhere near enough as of now. This could also be the reason why Nvidia recently released the H200 GPUs, which offer way more performance than the current H100 GPU. In fact, if you look at Nvidia's product roadmap, you can see that there's more than 10 AI-related products slated to be released over the next 2 years. This does not include the rumored GPUs that will be shipped to countries affected by the new export restrictions. Furthermore, besides the need for higher performance computing power for generative AI, let's also not forget the potential of autonomous vehicles and robotics. If, and that's a very big if, there's an advancement in the two aforementioned fields, we will see an even greater demand for more computing power. In terms of ROI from AI investments, Nvidia forecasts that $1 spent on AI infrastructure will lead to $5 in cloud service provider revenue over the next 4 years. While I'm inclined to believe those numbers for cloud service providers, I'm more curious about the financial benefits for consumer companies and enterprises. After all, they contribute to around half of Nvidia's data center revenue. For consumer companies and enterprises to continue investing in AI infrastructure, either through straight up building or renting from a cloud service provider, there has to be evidence of tangible financial benefits, on top of the more obvious productivity benefits. As of now, there's not been enough data yet with regards to the extent and amount of financial benefits, given that most companies and enterprises are just playing catch up at the moment to avoid being left behind in this AI wave. On the last factor of products in the market, put simply, the more options there are, the faster the S-curve for AI growth will plateau, mainly due to wider and faster adoption. Already you have seen AI-centric products for Nvidia's main competitor and customers. For instance, AMD's new AI-centric GPUs, the MI300A and MI300X, will start shipping at the tail end of 2023. They're expected to compete directly with Nvidia's H100 and H200 GPUs. Also, given the export restrictions, Huawei has emerged as a potential competitor with their Ascend AI GPUs in China. This could potentially result in Nvidia's close to 90% market share being chipped away as it's forced to provide lower computing power GPUs as a result of export restrictions. On the cloud service provider side, both Microsoft and Amazon have announced their own lineup of in-house chips to be used on their cloud networks. However, both companies have stressed that they still regard Nvidia as a significant partner and are just simply providing more options for their cloud customers. Regardless of the intentions, more options on the market will definitely hurt Nvidia's top line, as it will result in a lesser pricing advantage. In other words, great for consumers, but not so great for Nvidia and its investors. Besides benefiting from the AI boom, Nvidia's gaming segment could also see a slight growth in the future. While Nvidia attributed the year-on-year gaming segment revenue growth to back to school shopping and more gaming titles on GeForce Now, I think the main underlying reason is due to the increase in cryptocurrency prices. If we were to insert Nvidia's gaming segment revenue into Bitcoin's price pattern, you can see that the positive and negative growth will somehow correlate with the rise and fall in Bitcoin prices. This is not surprising given that GPUs are commonly used in the process of cryptocurrency mining. Thus, as long as cryptocurrency prices increase or remain elevated, we will continue seeing a slight growth in Nvidia's gaming segment revenue. So if we look at both Nvidia's growth drivers and inhibitors, where do I think the stock will go in 2024? Personally, I think Nvidia's share price will only go higher in 2024, but will not replicate the enormous spike seen in 2023. Of course, this is dependent on things remaining pretty much the same in terms of the economy and stock market sentiment. My reasons for thinking so are as such. Firstly, based on Nvidia's projection of 20 billion revenue in 4th quarter FY24, I expect diluted earnings per share to come in around $4. Assuming a conservative full year FY25 diluted earnings per share of $16, Nvidia's forward PE ratio based on the current market price would thus be at 30.2 times. This is slightly lower than both Microsoft's forward PE ratio of 31.9 times based on the full year earnings per share of $12 and Amazon's forward PE ratio of 36.75 times based on the full year earnings per share of $4. Of course, forward PE ratios will drastically change depending on the company's actual business results. Thus, it's there to see how Nvidia performs in the next year or so. Secondly, I think there will be a small but significant increase in Nvidia's automotive segment revenue. I predict it could hit the $1 billion mark in full year FY25 results. If that happens, I think the market could possibly react positively to it. Lastly, if market predictions that rate cut will likely happen in 2024, it could result in an overall boost in equity share prices. So how high could Nvidia's share price go in 2024? Now I'm going to stick my head out and say that it could hit the $600 region mark. But this will only be valid if a recession does not occur in 2024. Regardless, I expect Nvidia's share price to continue being volatile, especially when it comes to the release of the earnings results. If I think whether to invest in Nvidia right now, I would say hold off for now and wait for the share price to hit support levels at the $400 region. As a whole, I remain bullish on Nvidia's prospects in 2024. Nevertheless, I will still scrutinize its fourth quarter FY24 financial results to gauge the resulting impact of the export restrictions. So if you're a current or potential investor of Nvidia, let me know in the comments below what do you think of the company's prospects going into 2024. As always, if you found this video helpful, drop a like on it and subscribe to the channel for more of such content. With that, I will see you all in the next video. Goodbye!